What is good, guys? Happy Friday. I hope you had a blessed Friday. Today, we're going to go ahead and continue back testing. The first pair that was thrown out there was USDJPY. So let's go ahead and get into it. Right now, we are on the 1 hour time frame, right? And right now, this is all we see, right? Which is fine. I got to see some type of structure here, but I also want to see the bigger picture. So anytime we hop on a pair, doesn't matter what it is, crypto, oil, gold, NAS, USDJPY, doesn't matter what it is. You always want to look at higher time frames to give you some bias, right? And work your way down to the time frame that you like to trade, right? So let's go ahead and hop on the monthly time frame. Awesome. Let's go ahead and take a look at this. So as of right now, we can see that the market on the monthly time frame is in a bullish trend, right? We haven't really changed direction yet. If we were even going to use this structure as a change of direction, we haven't gotten that on the monthly time frame. A change of direction would have been maybe, let's just say, this candle here, right? If this candle would have broken and closed, this is going to be a fat candle, but it's okay. What am I extending? What? Did they change this? They totally changed this. That's wild. Okay, let's make this gray. All right. So now let's see. Can I move this in the middle? No, it's going to be a fat candle. All right. So let's just say this candle sold, 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 sold. And then we had a candle that looked like that on the monthly time frame. Okay. Then we might start to look at some type of, sell type bias, right? But we haven't gotten that. So far, we've only touched that area and we've taken off, right? We've touched that area and we're still rejecting off of this zone. So this structure is holding on for dear life right now. Right now, as soon as we do get that break and close on the monthly time frame, then we can start having the ideas and maybe some type of long-term, sales in the future. Go ahead and mute you guys out. Guys, go ahead and continue to blast this link. Go ahead and continue to blast this link, guys. So as of right now, check me out. Let's use this. This is my breakage structure to the upside. This is my BOS. So on the monthly time frame, this is going to be my starting point. Starting point for buys. Now, obviously, it did have some, well, I would say drawdown, but it did hit stop loss for sure. And then it went your way, which kind of is annoying, but it happens. Right now, let's go ahead and take a look at this on a lower time frame. Awesome. So now we're starting to see the bigger picture. I'm gonna go ahead and just shrink this candle, this box down to here. Okay, cool. Now, this is also what I am seeing here, right? I'm able to see higher time frame structure, and this is like higher time frame structure is what I'm really interested in ping ponging. I don't really like ping pong in lower time frames, but on the weekly time frame, we can see we have a breaker structure to the upside, and then we have a change of direction that sold us down to our monthly starting point that ended up sending the market back up. Right? It's all about time frame by time frame. Change of direction to the downside. Now, with this structure, this isn't usually a counter trend I would take, but on the monthly time frame, anytime you get some monthly time frame structure, I like to take some of these opportunities because they ended up like holding weight. They hold a lot of weight. Higher the time frame, guys, the stronger the structure. So I'm personally willing to risk on a higher time frame counter trend rather than a lower time frame because lower time frames weaker the structure, especially if you're counter trend trading, right? So this actually looked pretty nice. I personally didn't indulge myself in this because I don't trade the yens, but this would have been a pretty nice counter trend here. But I do like to counter trend like on NAS or on the pairs that I do trade like AUD, USD, or USDCAD. Monthly time frame counter trends, I love them. You can always get some type of, I shouldn't say always, actually. Shouldn't say always. But a lot of the time, right, you will get, even if the market, right, let's just say this was the next buy zone that we were looking at. Sometimes the structure will get respected just enough to go to the next buy zone, and then it'll take off. But because it's such a higher time frame, this can be like 200 to 300 pips, and you're just eating good on monthly like time frame counter trends, rather than 1 hour or 5 minute counter trends. They're not likely to hold. But so we can see that's why this structure ended up making its way back down. If we continue to play this out, let's go ahead, play that out. That's why that structure was able to send the market back down. Now, if the market really wants to continue down, right? Because right now there's a lot of liquidity sitting right here. Let's just go ahead and delete this for visual. Right now, there is a lot of liquidity sitting right here. We also know that this is my change of direction zone. Now, if the market wants to continue down on the higher time frame, this is going to be my next zone to play with, especially since we're having a lot of liquidity down here. And then we're building more right here as the market is making its way back up. Building more slowly. Building more slowly. So now we have the weekly picture, right? So if the market wants to keep buying, the market is going to continue buying to higher probability zones. Does that make sense? Give me a 2 if that makes sense. Because when you're on the lower time frame, the market, you can get smacked one time, a couple times, and then the market's going to continue to run. And you're like, well, why do I keep getting stop loss? Or why do I, keep taking the wrong trade? Like I'm pressing sell, but it keeps buying. That's why, because it's not worried about, the 15-minute starting point or the 5-minute starting point, or sometimes even the 1 hour and 4 hour starting point. Sometimes it's not worried about those starting points. A lot of the time it's worried about these higher time frame zones, right? So you guys have to pay attention and you don't have to trade them obviously as often because you're waiting most of the time, but it's really good to know exactly where these zones are, because when those moves start to happen and your zones on the 5, 15, and 1 hour start to be disrespected, and you just continue to take sells and lose, guys, it's time to understand what's going on and continue to ride those buys to the next best sell zone. So just keep that in mind for the future, okay? What is a starting point? Okay, cool. So a starting point, let's go ahead and just break that down real quick. Let's draw it out for you real quick. Jesus. All right. So a starting point is the last selling candle or buying candle, depending on which way the market goes, that gives you the break of structure, right? So let's say this is my structure. Structure is being created right now. And this is directly for you, right? So this is where you take notes and you watch the recording and make sure you have this in your notes. That way you can have this for the future. Right? So as of right now, all right, I'm gonna keep it like that. As of right now, all we have is a higher high and a higher low, right? Higher high, higher low. We need a break of structure. So the market needs to make its way and close above this structure here. Give me a 2 if that makes sense, Shauna. Let's go. So as the market makes its way, oops. Let's say we have that one last candle pullback. Let's actually give it like one more. Let's give it one more. Let's not have it break through yet. And then we'll have it break through here. Awesome. Cool. So we have a rally of candles, right? We have that break of structure. So we can see we had higher high, higher low. We have a brand new higher high. So the market is continuing in that bullish state, which is good, right? So anytime you see the market breaking structure, you have to think to yourself, trend continuation. The market wants to continue that bullish trend. So we have a break of structure here. We have our rally breakout. Once we have that rally breakout, follow that rally breakout to the last selling candle. 1, 2, 3, boom, right here. This is my last selling candle. Give me a 5 if that makes sense, guys. Guys, go ahead and take your screenshots, send it into the chat. Let them know that we're breaking everything down that happened this week. We're breaking down the starting points. People are getting clicking moments today, man. I'm telling you guys. Yes, the last selling candle is my starting point. Why do I call it a starting point? It's the last selling candle that started this bullish rally that gave us the BOS. Notice, why is this not my starting point? A lot of people will get this confused and say this will be my starting point. But why is it not the starting point? Right? A lot of people will see this rally and automatically say that's my starting point, but it's not. Why is it not, guys? Because this rally didn't break structure. This rally did not break structure. Notice how this rally had to make its pullback, right? It had to make a rest. It said, you know what? We're not going to break structure today. Maybe I'll catch you tomorrow, right? I need to rest up. We spent a lot of money and a lot of energy pushing the market up just to here. So boom, they rested up overnight and said, all right, New York open, we're ready, baby. We got that energy. We got that money flowing. Does that make sense, guys? So it's very important we understand where my dominant higher high is, where my dominant higher low is, because it doesn't matter what happens inside the middle, right? We need to find our last selling candle. Yeah, I could show you, of course. Yep. You want me to finish explaining this, or you want me to just continue to, like, go to go show you? Let's go ahead. I'll show you right here. Yeah. So check it out. The market is bearish in this area. Lower low, lower high, break of structure. Right? My breakout rally, my last selling candle, or my last buying candle in this example is here. Ooh, market barely missed it. Let me see if that was the monthly. Okay, no. Market barely missed it. So this is a possible sell zone for USDJPY, right? Possible sell zone. And this is a weekly time frame. This is holding a lot of weight. What is this? We have liquidity. So the market can definitely make its way in here sometime next week and give us a massive push down to continue that bearish trend. Because, I mean, right now, the USDJPY, I don't know. You guys got to think too, right? The dollar is also dropping, and USDJPY will follow the dollar, right? Because it's USD dominant. So if the dollar is dropping, so will USDJPY. So now that we have, does that make sense, Shauna, on how we found my starting point here? Awesome. I mean, if you understand supply and demand, it's pretty much the same thing. We just call it starting point, so it's beginner friendly. I had a setup. I thought it will still keep going bearish. I had the same setup. I thought, okay, awesome. I mean, yeah, we can see that this is the daily starting point here, and it already got some activity, right? This is the daily, so let's see how many pips this is. That's already 300 pips, right? So again, guys, higher time frames, a lot more pips. And then what did it reject off of? What did the market reject off of, and why does it continue to go higher? Look what we have here, guys. Break of structure to the upside. My bullish breakout. This is my last buying candle. I'm sorry, my last selling candle before my bullish breakout. That gave me my break of structure. This is the last demand zone, my last starting point. So if the market wants to go ahead and give me one of these, we change direction, we violate this starting point, we can finally have some bearish activity, right? But if the market respects this the way it's looking like it is, we can continue to go higher. Give me a 5 if that makes sense. So now let's go ahead and drop down to the 4-hour time frame. I mean, this is looking clean. I like that structure shift. Look at this, guys. Notice how we have liquidity built here. This isn't the cleanest structure. Yes, it sold. If you guys were on Monday, we we're talking about understanding the retracement phase and understanding liquidity and how you can use that to target as a target for your take profits. We know this is a breakage structure, right? I'm just going to put this right here. We know this is a breakage structure for the higher time frame. This is my daily starting point. Okay. Now, the market makes liquidity, creates liquidity. Now, again, we're bullish, right? Market is in an uptrend. We have higher high, higher low, higher high, higher low, higher high, and then it makes a higher low, and then it doesn't make that new high. But notice that it starts to give me this trend line liquidity right here, right? Now, again, we need to be careful and be able to identify this structure. This is what's going to help us right here. Let me see, where am I? Okay, this is what's going to help us right here, because again, if this is my higher high and the market comes all the way down to my daily starting point and respects this buy, this would technically be my higher low, right? If we're going to have a higher low here and we want to break structure, we would like the market to make its way, creating new highs. Does that make sense? Give me a 2 if that makes sense. Give me a 5. Give me a question mark if you are confused. Right? Because we're in an uptrend. Higher high, higher low, higher high, higher low, higher high. If the market makes that retracement all the way back down to my daily buy zone, and if the market stays bullish in the future, I would be expecting for the market to make its way above this previous higher high. Why? Why would I be expecting it to make its way above this higher high? Anybody want to participate? Why would I be expecting this higher low, right? Once it comes into my daily starting point, why am I expecting it to go higher? To grab liquidity, yes. But not only that, to continue the trend. The liquidity was the incentive to go higher, right? But the uptrend to make new higher highs, the liquidity grab, it all made sense to continue that trend. Give me a 2 if that makes sense. And iPhone 5, yes, because it didn't break structure to the bottom. You are also right. Right? You are also right. You're saying because the market did not do this, we should still be looking for buys, right? Is that what your thought process is? Because we did not, yes, you're also right on that. The market did not violate this buy zone. We should still look for buys. Right? Now, this is the thing, right? The structure in this played out so nice. I really like this. Now I'm gonna go ahead and focus on this structure here just to be clean for you guys, right? Would you consider this a break of structure to my downside? Yes or no, guys? Yes or no? Ready to go. Yes, right? Break of structure to my downside. BOS. Let's go. Now, again, this would be the counter trend. Now, as the lower time frame, as we go down to lower time frames, I am personally less likely to trade the counter trend. right? As we continue to go to the 4 hour, 1 hour, 15-minute, I'm less, me personally, you might be really good at that. And that, if you're good at that, continue to smack the markets. Me, I realize sometimes I get clapped, right? And not only that, I like to preserve as much capital as possible, right? So I also want to take losses off my book. And I realized by back testing, those weren't my best trades, right? Counter trends weren't my best trades. I was really good at trend continuations, right? So if you are a counter trend trader, this would be your starting point right here. That's the last buying candle that gave me my break of structure. So the market could possibly make its way back up. Let's go. Higher time frames is low-key overlooked, right? Because it really does help you with bias. Like it really does. And even if you trade lower time frames, that's going to help you just wait for that one setup that's in your zone, particularly that's going to send that market back up, right? So for me, it's all about preserving capital. Yes, everybody can catch a trade. Everybody can trade support and resistance, trend line, EMA, smart money, levels, starting point, supply and demand, you name it, people can trade it, right? But not everybody is good at capital preservation. Everybody could find an entry, but not everybody is good at risk management. Not everybody is good at, I just said it right now. Risk management. What did I say? Dang, I'm drawing a blank. Literally just said it. Why would that be your buy option and not the recent higher low? You're talking about this one right here? Because I'm seeing that we have liquidity here. Yes, capital preservation. Thank you, JQ. Paying attention. Let's go. Love it. Right? Not everybody has good capital preservation, right? So the more you indulge, the market's always going to be like, yeah, come here, come play, right? But the more picky you can stay, the more capital you can preserve. So when the market is back into higher time frame zones where institutions are playing, where the big banks are playing, guys, you can send this market back up because, well, with confidence and with more capital, back up, right? So I hope that makes sense. Again, there is no right or wrong. Do what you do. That's just what I like to do, right? Now let's go ahead and say and play this out. We have another break of structure. Now, again, guys, these are starting points, yes. But I'm personally not looking to take these. I would like these to get clapped, right? So I'm going to go ahead and just delete these for visual. Now, this is my change of direction, right? If the market wants to continue buying, how do I know this market's going to respect and buy the market up? Lower low, lower high, lower low, we change direction. As soon as the market breaks and closes above this zone, I am now confident in looking for some buy opportunities to shift the market up. If the market does not, and it respects this starting point, then the market's not ready to buy it. The market can shoot down, and we just rinse and repeat. BOS, move this over, and we just do the same thing, right? So let's go ahead and take a look. Let's play the market out. Dang, did that hit the starting point? I think it just missed. Let's see. Okay, we have a break of structure to the downside. I love it. I love to see that. I'm going to steal this. Love to see that. Now let's see. This is my break of structure line. Where should my change of direction line be, guys? Draw it on my chart if you can see it. Where should my change of direction line go, guys? I know we got some vets. Let's go, JQ. Exactly. Guys, blast this link. Send in. Let's go, Joy. Love it. Take your screenshots, send in your screenshots and the link into the Powerhouse chats and blast this link, guys. We still got 30 minutes on this call, baby. Let's go. lower high, recent one. Draw it on my chart. Oh, you're talking about this? Yes. Yes, iPhone 5. Let's go, baby. Right? So now that we have that break of structure, lower low, this is my left shoulder. Lower high, this is my neckline. Lower low, this is my head. If we can change direction, I don't know when the market's going to come back, but I would like to see the market make its way and give us an opportunity to shift that market up higher. Okay, now let's take a look. Boom. Awesome. I love to see that. So we have my left shoulder here. And then it looks like my starting point is right here. This is very funky. These aren't my favorite ones, but these do get respected because they're break and retest demand zones. They're break and retest buy zones, right? You got to think about it. If we have a lower low, lower high, lower low, if we break structure, somebody is taking this break and retest, right? I'm not saying that they're good or bad. Like these are good zones, right? This is a demand zone, and it goes hand in hand with break and retest, and it has a starting point. Everything looks good. So if the market does respect and go higher, that was an opportunity that you can take, right? It's up to you to take them or not. But if you can spot that out, that's opportunity one. Opportunity two will be this left shoulder, right? So let's go ahead and take a look. Well, that's live price right now. That's live price right now. So let's see what this sniped. Let's go down here. Let's go this way, 1 hour time frame. Yeah, these aren't my favorite left shoulders. I'm not gonna lie to you. It looks like it sniped this. These aren't my favorite left shoulders though. I ain't gonna lie. Because they're ugly. But that is a left shoulder. But it's not my favorite one. Personally, I would have used this one, which it did respect. We have the change of direction. Change of direction here. Let's move this out the way. Yes, the change of direction is here. We have the change of direction. Boom. And then the market comes right back into that right shoulder, and it comes right back inside this starting point as well. 2 for 1. Got the 2 for 1s, baby. Dang, that was a hitter too. And I don't ever trade USDJPY. But that was a hitter right there. Easy money. And it goes with the trend, right? Fire. So yeah, I mean, personally, for me, I would not have taken this. I would have just waited for that change of direction, like so. Like so. So we can go ahead and delete this now. This is my stop loss. But I also know if this changes direction and violates, well, I'm sorry, if this violates, then we could be heading down, right? So keep that in mind. Keep that in mind. But I like this. Let's drop to the 1 hour time frame now. Now notice, guys, when you focus on time frame by time frame, things get really clear, right? Notice this is a break of structure. This is my change of character line. Each break of structure has its own change of direction line. Notice this is my break of structure. This is my change of direction line. This is my break of structure. This is my change of direction line, right? Notice how it created equal highs. What is equal highs, guys? Let me know. Liquidity. There's liquidity sitting at the top right here, which helps our buy bias, right? If the market wants to continue, let's just I'm just going to put a box around that zone. I'm just going to make it smaller too. Why not? Since the market hit our buy zone and the market is going our way, everything looks good structure-wise. Market is building liquidity with equal highs. But not only that, if we get that out the way and just focus on this structure here, I'm gonna simplify this and also move this down to the 1 hour starting point. We have a break of structure to the upside. My last selling candle before my rally breakout is here. So notice, guys, once we break structure, what is happening? If you guys were on the Monday call, this is the retracement phase that is happening. But what can you see? If you can draw it on my chart, draw it. I know I want to buy here, right? That everybody is waiting right here for buys right now. Well, yes, we do have the starting point, but I'm looking for buys. So is looking for buys. Sean is looking for buys. JQ, Joy, iPhone 5, iPhone 2, the iPhone 11. Everybody's looking for buys right here, right? But what is telling me, what is giving me the good hint that the market will continue higher? Yes, we're starting that uptrend flow, right? We do have the uptrend flow. Thank you for participating, JQ. Anybody else? Would anybody else like to participate and draw on my chart to see what you see? It's okay if you're wrong. Like, you can be wrong. I don't care. I want to see what you see, because when you draw and you take a step back, you're like, that makes sense. Yes, iPhone 5. Who are you? Reveal yourself. Watch him be my guest and he's just like calling everything out. That's funny. Who's equal? Who is iPhone 5, bro? That's funny as hell. But yes, we have liquidity, right? We have trendline liquidity happening. Look at that, guys. You can see the candle. I mean, you can see the wicks. Trendline liquidity right there. Making its way downtown. Walking fast. Let's drop down to lower time frames. And it does create equal highs as well. Dang, iPhone 5 is not revealing himself. I don't know. That's kind of shady. We might have to kick him off. He knows too much. Equal highs, along with some trendline liquidity. Bam. Right now, this looks pretty good. I would not mind taking this to continue my bullish idea, right? Because again, this is option one, idea one. If the market respects this, awesome. We were looking for buys anyways to continue higher, 1 to 3. Now, if the market wants to go ahead and disrespect this, hey, it's okay. It happens. Wipe that tear. It's fine. We run our risk to reward. This is why we run 1 to 3s, because if we take a loss, we're down 1%. Give me a 1 if you are with me. If we take a loss there, we are down 1%, right? Okay, cool. Take that loss like a boss. If you can catch the counter trend, that's up to you. But we want this spot anyways. This is the real zone that we want. So if the market can make its way, awesome. Let's see if we can go ahead and get some respect and shift that market higher. And again, where are we looking to? Higher time frame targets. So yes, we want to collect our 1 to 3s 100%. You should always collect the 1 to 3. Partial out, make sure you do what you got to do. But I want to target these highs. Why? Because I want to continue with the trend. I want to continue with the bullishness. So if you understand higher time frame structure, and if you're expecting the market to continue with the higher time frame structure, this is how you hold trades and swing opportunities. Give me a 2 if that makes sense. But the thing is I don't know if it's going to respect this zone and continue higher. I don't know if it's going to respect this zone or this zone. We don't know. So we have to take these opportunities as they come. Opportunity 1 and opportunity 2. And it's okay if you take your loss. Don't be afraid. Don't overthink and be like, oh shit, I should be selling now. No. We have our buy bias because of 1, so it's a mixture of using levels to get your smart money buy. I love that you who are you? I'm not even gonna answer your questions until you reveal yourself. All right. So don't ask questions unless you don't want to tell me your name. But look, that's the thing. I don't know if it's gonna respect as Giovanni. Oh, let's go, baby. I love it. See how you have to create a little FOMO? So it's a mixture of using levels to get your smart money buy. That's the thing, bro. That's the thing. We don't even worry about smart money opportunities. Struck like off of like buy zones. I don't even like, I know most people probably look at supply and demand, but like smart money buys, like, how would I say this? If that's how you see it, because I know a lot of people mix smart money with levels. I know I do too, but I use smart money for me. I use smart money for liquidity and target points because levels is easier to find opportunities for myself. I can see head and shoulders and starting points a lot easier than I can see smart money opportunities, especially back then. Now I can, but back then it was much easier for me to see starting points broken down, obviously supply and demand broken down as starting points and smart money broken down as head and shoulders. So when they broke it down as starting points and head and shoulders, I was able to see that. And now I use liquidity as target points. However, some other people will use levels as their structure to understand opportunities and then find smart money entries that way because they could understand, okay, we have a level setup structure. So let's go ahead and see if we could find the smart money within it. Right. So if that's how you're seeing it, that's always something I get stuck on. Okay. And that's where a lot of people, they honestly fuck up when they mix the two because they don't know exactly what they should be looking at. So for me, it was much easier seeing head and shoulders. Like this is a head and smart money. If I break this down, or if we just take a look at it, this is smart money based off of everything. We have the institutional move that happened that took liquidity, and then the imbalances that were created. Obviously, on lower time frames, there probably isn't as many, but as we jump to higher, let's see. Oh, it was filled right away. Let's see. Go to a higher time frame. I mean, it doesn't look like there's actually any on this, but nonetheless, the structure is relevant, right? And that's why for me, I just couldn't understand smart money and with imbalances and not like I saw how levels and head and shoulders respected so often, whether it was an imbalance or not. So I just ran with it and used uh smart money as my liquidity to understand targets, right? Because it's simple. Levels is simple structure, right? Higher highs, higher lows, lower highs, BOS, change of directions. And if you could understand break a structure and change of direction, you are looking at a head and shoulder and a smart money setup. Okay. So, with that being said, if you find smart money setups easier using level structure with BOS and change of direction, then use that. But understand our entries are not the same. Okay. We use starting points and shoulders. Our entry points are different, but structure is identical. Give me a 3 if that makes sense. iPhone 5. Let's go, baby. Love that. Love that. So again, that's something you backtest, right? How can you how can Giovanni see the markets a bit easier? Is it easier using a levels lens with smart money liquidity for target points, or is it easier for you to see it with levels with the levels lens structure wise with smart money entries, right? So that's really up for you to decide, but you try not to defer the two. Okay, entries are a little bit different, but structure is the same. So when you watch the smart money educators, that's something to think about, right? You will see head and shoulders and you will see levels all over the place, but they will not have our entries unless it's a demand, which is which is a starting point. Supply and demand, starting points. That is the only thing that's only the pretty much the only thing that's the same, to be honest. So but yes, breaking that all the way down to the 1 minute, or I'm sorry, the 1 hour. I personally don't trade anything lower than the 1 hour, especially on Forex pairs. I just get got. There ain't no easier way to put it. I get manipulated as fuck. So for me, 1 hour and above always works best. I am not the trader to worry about snipes, guys. Okay, so if you want like the snippety snipe, you might have to go watch Neri or somebody else. Like I'm not worried about snipes. I want to find high probability entries, take opportunities as they come, and continue with the trend, right? And I use my risk to reward as everybody should. Even if you worry about snipes, Neri has to run her risk to reward. Mike Nav has to run his risk to reward. Junior has to run his. Geo has to run his. Everybody has to run their risk to reward. Okay, so don't think everybody just like 100 and just catching nasty snipes out here. Okay, it's just not factual. But let's see, what pair do you guys want me to look at next, guys? When was this? This was Wednesday. If you were focused on the daily starting point, this was the move of the week. I mean, this was it right here. Yes, sir. USDCAD, let's get it. Higher time frame, right? Right away, what can we see, guys? Bullish or bearish? Bullish or bearish? Let's go. Bullish. We do not have a change of direction yet. Yes, I would say consolidation. You are not wrong. This is, I mean, you're not wrong. This would be more consolidation than anything. But technically we are in that bullish state. But yeah, you're not wrong. And we just swept liquidity. So with that, I mean, guys, honestly, you guys should have been around. When was this? I started doing my levels calls around this time, and we ended up catching sells here, and then we ended up catching buys around here, and we literally ping pong this whole thing. Crazy times. But we just swept liquidity, so there is a chance we change direction. Again, this is higher time frame. Higher time frame holds a lot of weight. There's been money sitting at this since 2016. That is damn near 9 years, right? So there's been money. Money was just taken, right? So let's take a look at this. Break a structure to the upside. If the market is going to respect, we have the starting point right here. It's chilling in that area right now. My change of direction is here. My dominant lower low or higher low is in this area. Oh my goodness. Okay. If you want to use this, you may. It just might not give you a. I'm personally not a fan of using the inner change of directions. I'm a fan of using the dominant lows. But if you use this, feel free. Feel free. So as of right now, this is the area, right? This is my starting point. We're in there. Let's go ahead. Change of direction. Let's go to the weekly. All right. So I can see here that we have a slight break of structure. And now I'm just refining, right? Break a structure. My starting point is down here. Same thing. So now the market's in my starting point right now. It has touched my starting point. It already got some type of reactions. Boom. Now, again, this is the weekly time frame. So just the first touch, even if you got in at the first touch, bro, let's take a look. That's already 220 pips, depending on where you entered right here, off the weekly zone, right? So sucks it didn't go your way 100%, but you were able to get some pips off it. You know what I'm saying? So now let's take a look. If the market's going to respect, one thing that I'm not like, or one thing that I do like, is that we have liquidity being built up. So whoever got in early, sometimes it happens. You get in early and you are the start of the liquidity, right? And then we have trend line. And then look what happens. We go in a little bit deeper, we sweep this liquidity, and then we start heading out, right? So do not be afraid when zones go deeper. You just got in a little bit early. And this goes on every time frame. If you're on the 1 minute time frame or lower time frames, and you see that you were the first one in, and then maybe it hits your break even or whatever the case may be, and it's just like tapping around right here. I'm just saying, you might be the first one in, right? Don't be afraid if you take a loss. The market may go a little deeper. That's okay. Let's say you got in and your stop loss is like this. Guys, do not get scared. Do not get scared. Do not take yourself out the trade because the market is heading down towards your stop loss. Guys, it's taking liquidity. Will it hit your stop loss sometimes? Yes. It is what it is. It happens. But we're expecting this market to reverse and continue. Give me a 3 if that makes sense. Because trust me, guys, just because I want it to go deeper and give me that clean head and structure type of, confirmation, the market doesn't have to do that. The market can just continue. So it's important. Do not, even if you see liquidity being built up, if you're already in this trade, just let the trade play out, right? No need to micromanage, okay? I've seen time and time again, and I mean, you guys will probably see for yourself as well, that you enter a trade, it starts to build liquidity, and you get out because you think the market's going to go a little bit deeper and give you a little bit of a better entry, so you can obviously make more, right? Guys, it doesn't always happen. Trust me. Like I've exited trades where I'm slightly in profit because I'm expecting the drop, and then this is what happens. And it's gone. And it's gone for the week. I'm like, fuck, bro. Why? Why am I anticipating? Why am I anticipating the market rather than just trading what I'm seeing? And I'm seeing a perfectly fine opportunity, but my brain don't shut off, man. So guys, please do not do that. Happens time and time again. You're already in a buy zone. Don't overcomplicate it. Don't overthink. If anything, put an alert right here so you are notified when you hit stop, when your stop loss hits. You don't even need an alert. Most trading apps now will send you an alert to your phone saying, hey, your stop loss got smacked, bro. Better luck next time, right? So no micromanaging. Now let's drop down to, dang, this is fire. Oh, we ended up catching the sales too. I really like sales in this area. Higher time frame sales. Again, because we're bullish, this would be a counter trend. Because technically we haven't changed direction yet. So this would be more of a counter trend sell. But let's see. Because we took liquidity, I'm a fan of this sell too, because we took liquidity on higher time frame. This can possibly, especially if we just like leave like this, guys, this is the thing, right? If we just leave like this and create trend line liquidity and make its way up to my higher time frame sell zone, I'm thinking that, we might have a nice drop. If we create liquidity all throughout here, guys, that's a setup. The market's creating all this liquidity for us. How is the market creating all this liquidity down here to sell, and the market creates no liquidity to buy? There's no incentive to go higher. All the incentive is to go lower. Does that make sense? That's also a reason why you should never mess with your trade once you're in. So now let's take a look. Let's see. On this time frame, it's very, very faint. I almost missed it right now. But this would be the break of structure and then my change of direction. So let's drop down to the daily. I would like this one a little bit better. This is a bit cleaner. Change of direction happens. Change of direction happens right there. Very, very slight. Very, very slight. And then we go higher, which gives me a bit more confidence. But because this is my breakout rally, right? And we just respected, this is my starting point for buys. And it's continuing, right? This would be my shoulder. Obviously, my shoulder holds a little bit of drawdown, but it's obviously continuing to go in our way. So just depending on what you take there, you either hold drawdown or you have a little bit of a snipe. But now same rules apply, right? Let's drop down to the 4 hour just to have some better structure. So we can see things a bit more clear. Let's go ahead and shrink this up. And let's go ahead and delete this in the background. So now this makes a bit more sense, right? This was the daily structure, the daily shoulder. And obviously we had some drawdown. But notice how all the way down here, guys, where my starting point is. Anytime you see a starting point, guys, always look down and always look left. Because if this is my lowest area, the lowest of the low, and we have a previous break of structure here, guys, this is a head and shoulder. BOS at the downside, my change of direction, especially off that higher time frame zone. Give me that zone back, bro. Give me that zone back. Oh, is it right here? Oh, no. Let's go up higher. Oh, man. Especially on this zone. Check this out, bro. This is the daily shoulder, right? This structure shift happened at that daily starting point. Look at that structure shift, guys. As the market is making its way down, BOS, BOS, BOS. We finally touch my starting point, and then we get this change of direction. Guys, find your last BOS that happened right before your change of direction, and that's your head and shoulder setup. Left shoulder, head, change of direction. We need my right shoulder. For Giovanni, this is your starting point. This would be a perfect example of merging the two because it's a clear imbalance, right? But for levels, we don't worry about imbalances. Worry about your BOS and your change of direction, and you will be on to a good start. I promise you. Because I didn't learn about liquidity like I think I learned about liquidity after my second year. I didn't even know about liquidity. Bro, I didn't even focus. As soon as I found levels, I was like, I ain't never going back. I ain't never going back. You know what I'm saying? Yeah. It was like have you guys seen Friday when it's like, I know I was that guy that said when I get money, I ain't never leave the hood. But as soon as I got my money, I was gone. That's how I felt when I found levels, bro. I was like, y'all, smart money? Levels, my boy. We outies. We're out of here. Packing my bag, closing my laptop, and we're gone. We're headed out. But notice how everything is aligned. Now, same rules apply. Buy zone, BOS, BOS, BOS. This is my very last break of structure that happens right before my change of direction. All we do is continue to move. This is my last selling candle. This is my BOS. This is my stop loss. Okay, you took a loss at your starting point, but you sniped the mother out that right shoulder. And I would love, I mean, this would be TP1 for me. That's already a 1 to 7. And again, if we can continue, like if I would like to see if we can come at least up to here, or up to here. I think I have possible sales in this area. But just off the buys alone, if we could even clear some of this out, that would be fire. That would be fire because we have a starting point. Was this starting point touched? That starting point has not been touched. Right? So the market can easily, because this does look like liquidity, even though it's giving us opportunities. I can't lie. It is giving us opportunities, but this does look like a whole lot of liquidity building up, right? And if the market does want to continue down, this is an easy setup. Lower low, lower high, liquidity, liquidity, tap right back in. Let's continue down. Right. So even based off of this 1 to 7, fire, fire. Partial out your 1 to 2s, 1 to 3s, you know, stack your chips, take money off the playing field. I mean, what more can you ask for? You know what I'm saying? What more can you ask for? So even if, think about this, right? Let's say you hit you try to take this as an opportunity because this is opportunity 1. Wow, am I pressing the wrong button? Anyways, let's delete this and let's move this here. Let's say you took a loss here because, you know, this is opportunity 1. That's okay. You're down 1%. Guys, this already hit 5%. What's 5 minus 1? I know y'all know simple math. What's 5 minus 1, guys? You tell me. 4, baby. We are up 4%. Do not fear a loss. Understand your bias and use your risk to award. Guys, your risk to award. Some of you guys don't know how powerful you are and how powerful the strategy is because you're scared to take a loss. But when you use your risk to award, your confidence, the account, everything starts to grow because you're understanding the strategy. You're understanding that, hey, sometimes the market might entice you to get in early, or sometimes we're taking opportunities as they come because we don't know what zone it's going to respect, but that's what traders do. But the thing is you can't be weak-minded. You can't be like, oh, I took a loss. I gotta change my bias. I'm gonna get off the charts. Stick to your bias and run your risk to award. You do calls on Monday too. Yes, I go a bit more in depth. I try to break down things that happen in the market, or I try to give a training on something specific. That way, people can always have that in their back pocket, just in case they see that. So yeah, yes, I also do calls on Monday. They're a bit more basic. I take time to break things down. 8 p.m. Same time, 8 p.m. Monday and Friday. 8 p.m. Monday and Friday. Fire call, guys, in my opinion. The charts you guys, the pairs you guys called out had some fire examples. And I like that, guys. Anytime you guys give charts and you guys ask questions, it gives me the opportunity to find really, really good examples specifically for the questions and the things that you need to see and you need answers on. So do not be afraid, guys. Don't be a spectator. Always watch, guys. Take advantage. Take advantage as much as possible. Appreciate you, Shauna. Take advantage as much as possible, guys. Trust me, it's worth it. It's so powerful to gain confidence. Like, you not having confidence holds you back. And when you feel like you can't move, you can't really make moves confidently, but you can see that your charts play out, guys, there is no worse feeling to understand that you understand what you're doing, but you're scared here, so you can't make progress. That's the worst feeling. This right here, Monday and Fridays, is where we get all those questions answered and we feel sharp, we stay sharp. So when opportunities come, we're ready, right? We have all our notes written, so we're ready. But with that being said, guys, I hope you guys enjoyed the call. Hope you guys have a great weekend, and I will catch you guys on Monday. Peace out, guys.